top nickel miners on the ASX are up between 20 and 30% over the last month and 100 to 150% over the last year. These leaders are following the same direction as lithium and other minerals used in electric vehicle batteries. We're going to cover the top 6 nickel miners on the ASX that have been marching north, while lithium and silver have been catching most of the headlines. Following yesterday's headlines on the electric vehicle news from Jaguar and Land Rover that they're going to be electric vehicle only by 2025, and covering the lithium shares on the ASX that are moving strongly, we're also going to explore the impact on the nickel market, and starting with Tesla's nickel stance. For Tesla to produce their electric vehicles and other products, they could need up to 1.15 million tonnes of nickel a year. That's almost 50% of the current global supply, which is forecast for 2030, and this is just to meet Tesla's ambitious production targets. Tesla also announced last year that they'll be broadening their scope to cover cathode and battery cell production as part of their plans to reduce battery costs by 50% and scale their production to 3,000 gigawatt hours by 2030. According to Wood Mackenzie, that places Tesla at the loftiest ambitions of all major battery manufacturers in the world, and they've said, "We estimate the total planned cell manufacturing capacity, excluding Tesla, to be 1,300 gigawatt hours by 2030. Tesla's announcement is more than twice the total global pipeline capacity. Also, the initial estimates from Benchmark Mineral Intelligence suggest that Tesla's nickel-based battery cells could account for 1,350 gigawatt hours of this ambition production figure, which is partly why this figure is unlikely to be achieved in 2030, even if global nickel production does increase and reach the projected 4.3 million tonnes a year by 2030. That then places a lot of competition on the nickel supply, not only from Tesla, but from all other battery producers, as well as the standard industries that have also got stainless steel requirement for nickel. With those insights on how the demand for nickel is changing and evolving, we have a look at the ASX's top performers that are exposed to the nickel commodity. And we see that number 6 is Podium Minerals. POD is the ticker. They're up 20% over the last month. Number 5, we see Galilee Mining, GAL. They're up 22% for the month. This company has been very good at presenting consistent news flow, and we see that they are currently presenting at RIU Explorers Conference in Fremantle, and that's after earlier in the month they announced updates on the Delta Blue prospect in Fraser Range region of Western Australia, and that was over their drill target from the electromagnetic survey. Number 4, we see MacArthur Minerals, MIO, 24% over the month. Now here they have the Moonshine Nickel prospect, although they're better known as the Green Iron Ore Company, which seems like an oxymoron in the mining space. But beside the point, most of the focus has been on the magnetite project in Lake Giles of Western Australia. Nonetheless, they do have some exposure to nickel, but Queensland Pacific has definitely been a better performer, 28% over the month, that ticker QPM. Queensland Pacific Metals have announced a successful pilot plant campaign to confirm the flow sheet, which provides them with confidence to proceed towards their DFS for the TEC project. Now, 14 dry tonnes of respective New Caledonian ore was processed. The key numbers to come out of this is that the nitric acid ore leach performance exceeded expectations, with 98.7% nickel extraction, 96% cobalt extraction, and 95.3% iron extraction. Now, the solid liquid separation performance of leach residue also exceeded their design expectations. So the iron precipitation yielding high grade of 61.6% iron hematite production that can now be prepared to move into the blast furnace feed for steelmaking. Number 2 is Eldora Resources, ARN, up 31%. The company has made 2 significant announcements in the last 2 weeks. The first one is that they have successfully expanded their nickel copper footprint, and this is an exploration license covering 192 square kilometres, which is claimed to be the largest layered mafic ultramafic intrusive complex in Australia. So this highly prospective license contains multiple targets which warrant further immediate work for the license since the license has been granted, which then takes them into the announcement 2 days later, announcing updates from their earlier airborne VTEM survey that identified 16 targets back in December 2020. So the further refinement of this data and imagery has provided the basis for the selection of 7 exceptional targets for follow-up exploration. This takes us to number 1 over the month, which is BSX, Blackstone Limited, up 31, just shy of 32% for the month. A company that's had a very solid news flow. We look back into late January, they see that they announced their non-binding letter of interest with Trafigura. Trafigura is one of the largest physical commodity trading groups in the world and is one of the leading physical commodity traders involved in copper, zinc, lead, nickel and cobalt trading. The letter of interest relates to a potential agreement for Trafigura to supply certain quantities of nickel and cobalt products to Blackstone in respect of the production of the Blackstone of downstream products for the lithium-ion battery industry at the Takua Nickel project in Vietnam. The next announcement from Blackstone is on the 4th of February. They were pleased to report that it had a massive sulfide vein mineralisation in multiple drill holes from its maiden exploration program in the King Snake project. They're happy with this immediate success because it reaffirms the prospectivity within the region and the company's strategy to defining a high-grade nickel targets using the electromagnetic geophysical survey and techniques from earlier. The new intersections, together with historic drill results, have defined a strike length of 800 metres or longer in the King Snake tenement. Later in February, the company made announcements with regards to their over-the-counter trading. Now, this is in the North American aspect where they've been upgraded from the initial listing or trading from the 3rd of December in 2020 to a higher level in a short period of time. They've identified 3 key advantages of this North American investors' exposure through the over-the-counter markets is that it trades and settles are in US dollars, they're trading in the North American time zone, and that the OTC, over-the-counter QX share, is the same class as the ordinary shares on the ASX that are traded on the ASX under the ticker of bsx. They're just simply registered in 2 different registries. Finally, the announcement that is with regards to the nickel at King Snake is from Blackstone on the 16th of February, and they've reported that it continues to intersect massive sulfide vein mineralisation at King Snake. Now, all 5 additional drill holes have intersected MSV, massive sulfide veins, mineralisations. Once again, reiterating that new intersections together with the historic drill results again define the strike length of over 800 metres. The next step for Blackstone's drilling at King Snake is focusing on new electromagnetic geophysics targets that extend down plunge to the west of the historic drilling. And to give investors something else to look at, the company expects to provide an upgrade regarding the anticipated King Snake assay results, along with results from ongoing infill drilling at Bang Chang and Bang Phuc DSS over the coming weeks. The most significant intercept from the latest round of drilling was at King Snake's survey, shows an intersection of 19.55 metres of sulfide mineralisation. If we have a look at these nickel companies over the last 12 months, we can see that they did have a significant fall throughout the COVID period. However, most of that has been regained like the rest of the markets, but because these are exploring companies or explorations and miners in the development process, they have a much higher leverage or a higher beta than the market itself, so their share price performance has been significantly higher. Out of the 6, Eldorado Resources, ARN, is up 21% over the year, Galileo Mining, GAL, 78%, MacArthur, just under 100%, 98.5%, Blackstone, 111%, Queensland Pacific 121% over the 12 months, and number 1 is Podium Minerals, POD is the ticker, just shy of 150% over the last 12 months. For more insights into the supply chain of Tesla and the ASX companies that are feeding into it, you can click on the link here to see which ASX listed companies exposed to lithium are leading the market higher and having those phenomenal runs. You can click on the link over here. And to get more updates on the leading thematics on the ASX, the companies driving them higher and the news behind them, you can subscribe here and remember to click the bell so you get alerted and the like button so you let us know which videos and insights you appreciate the most.